Greetings everyone, welcome aboard. My name is Joseph James. It's November 23rd, 2010. Happy Tuesday to you. We got one more day left in this short week. We got the holiday Thursday and Friday, so we're closed Thursday and Friday. So we got a short week this week. Boy, lots of action today, right? 8:30 news, 10 o'clock news. We had 2 o'clock meeting minutes. Gold hitting all-time highs again, right? Gold back to launching after that Ireland chatter about the bailout this morning. Of course, people dumping their euros for the gold, right? Lots of stuff going on this morning. Before we talk about the trades we took today, had a great day in the room, right? Another big winning day here in the room. Don't forget about our blog. Okay, if you're on the blog right now, guys, right? Get to know this place. The blog has all kinds of great resources for you. Now, above the blog, right up top, all of these headers up top here. Okay, if you're a beginner trader, check out the discipline cycle video in the beginner's corner. All right, guys, if you want to know why we use certain chart types, check out the video on chart types under Trade Room Resources. Maybe you want to know about trade management, right? How do we manage our trades? Well, right below the video, right, type in trade management into that search box, hit the search button, and you'll find all the videos, all the articles we've written on our trade management. And then, of course, if you want help anyway, right, if you want help, we got live support there for you. Okay, someone's standing by right now to help you guys get signed up as a member, right? Come join our community of traders. We just released that auto trader today. So, guys, go live support there below you. You got YouTube, you got Facebook, and then don't forget, very important, guys, below this video, right, in the right side of this page, you'll see the follow me button, right? Make sure you guys follow this blog. By following the blog, you won't need to wait for our newsletter to come out to tell you what to go look at, right? If you follow the blog, you get an instant update every time we put something new on our blog. So follow the blog. That way you get an instant update every time we put a trade call out, right? We have articles or videos. Get to know that blog. Get to know that blog. And don't forget, beginner's training on Friday is canceled for the holiday. All right, 2, 4. How we do today? 2, 4, 6, 8, 10 total trades, 251 ticks. That's $2,500, guys. Now, I didn't expect this, but again, we knew this would be a great time to be trading. We know the end of the year is always the best time to be a day trader. I've only got one day this month under $1,000. Okay, we've got, what, 23 days? 2, 4, 6, 8, 10, 12, 14, 16, 17 days so far this month. You can see only a couple days are below $2,000. Only one day, though, this entire month, under 100 ticks. All right, guys, pretty darn good month. 250 ticks today. That brings our weekly total now to 5340. Did 2830 yesterday, 2510 today, 5340 for the week, 38,000 and change for the month, and now well over $222,000 for the year of 2010. All right, we're going to finish up this great year of 2010, you guys, with a bang here. We got 3 more days left in this month. And again, like I said, the next 3 days, we're going to be talking about the specific news events. So make sure you guys come in and join us, ask questions. But let's see how we did today. So 250 ticks, 38,000 and change for the month, guys. Only 4 contracts. Only 4 contracts. Now, what happened today? Lots of news, right? Lots of news. Because we don't have Thursday and Friday open for us this morning, we crammed all that news into Monday, Tuesday, Wednesday. Now, today was where we saw a lot of news, right? 8:30 GDP, 10 o'clock existing home sales. And then what people were waiting for was that 2 o'clock FOMC announcement. So we knew we had a lot of things, right? A lot of things that were happening today, 8:30, 10 o'clock, 2 o'clock, that people were going to be waiting for, right? Possibly catalysts. Okay, 8:30 was a catalyst. 10 o'clock was a catalyst. 2 o'clock, people were waiting for. So we used 8:30 and 10:30 to take trades with. Okay, understanding what the news events were talking about, understanding what the effects would be in the markets, we traded accordingly. And then people were waiting this afternoon for that 2 o'clock meeting minutes, which really kind of kept the gold kind of chopping around early in the morning. So 8:30 this morning, we had GDP. Now, what was odd this morning was we woke up this morning, we saw the charts had all dropped, right? Everything was dropping, gold dropping, crude dropping, right? Euro dropping. And our initial thought process was, right, we thought obviously nothing of it. But then we grabbed the dollar, right? And of course, we'll show you guys the dollar in a second. But the dollar had been running all morning. And so we thought to ourselves, wait a second, GDP this morning, okay, kind of follow the bouncing ball, right? GDP this morning was expected to be higher than it was last quarter. Okay, so we're expecting to have a higher GDP reading. And it looked like the dollar, right, had kind of wised up to the situation, and the dollar had already priced into the market what that GDP reading would be. We see the dollar is rising, which means the dollar already knows what's going on, right? Dollar already expects to see that big increase in GDP. So that's what was drawing the gold down, drawing the crude down, right? Was that dollar rising on speculation for what the GDP number would be at 830. So what happened was we saw 830 come out, GDP number came in right where it should be, right? Pretty much where we're expected to be, a little bit higher than expected actually, but the dollar had already priced that in. So the dollar didn't move very much. We didn't get much movement at all at 830, and we pretty much just kind of sat here wondering, okay, well, where's the move, right? Where's the move? And again, I want you guys to understand what really happened today. Okay, the dollar priced in that higher than expected GDP reading, right? GDP rising, good for the dollar, dollar rises. With that dollar rising, it brought down the gold, the crude, the euro, right, at the lows. Well, of course, we then bought those lows as price was rising back up. But the point I'm trying to make here, though, is that the 830 GDP was already priced into the market, which is what caused the markets to almost, synthetically drop, right? It wasn't really fundamentally dropping. It was just this speculation. So when we saw the GDP came out as expected, we knew the dollar had already priced it in, was a great buying opportunity on the gold, the crude, the Russell. The euro, though, was a completely different story, right? People were dumping the euro and jumping into gold, so the euro kind of threw us for a loop today. But everything else, right? Everything else looked pretty darn good, though, right? Pretty darn good. So we had a chance to buy those lows on gold, buy those lows on crude. Again, knowing that that dollar had already priced in that news event at 8:30 this morning. We really didn't get much movement up or down, and it was mostly sideways until about 10 o'clock. And then we had news chatter from the IMF, right? IMF comes out and says, we got problems with this Ireland bailout. All of a sudden now, what happens? There's concern about the euro. People are dropping euro, taking that money now, buying gold. Okay, so something comes out at 10 o'clock, IMF chatter on the news data, right? I listen to my news feed all day long, listen to some people talking about, right, this Ireland bailout. And of course, then we see the dollar pops. Well, this kind of threw us for a loop. We didn't really know what to expect here because we saw what? We saw dollar rising. Okay, after that news about Ireland came out, dollar began to rise. Now, why, right? That usually doesn't happen. Usually when there's global concerns, the dollar falls. Well, this was a different situation. What was happening was people weren't dropping the dollar, they were dropping the euro. So at this point, gold is rising, right, based upon fear in the market. Okay, gold rises based upon fear in the market. We then get the euro dropping, so we had members and guests selling the euro short. Meanwhile, I have the gold, I'm buying the gold with the dollar rising. It was a really interesting situation this morning. As people began to get scared about the European, right, that situation in Ireland, that bailout among the Eurozone, we all of a sudden saw people dropping euro and jumping into gold. That caused the gold to rise and the dollar to rise, which doesn't happen very often. So we really saw kind of this mixed signal, this curveball here today, brought on by people dropping the euro and buying gold. So again, we had to kind of regroup, dig a little bit deeper into the price action, because at first, right, you're not going to want to buy the highs on gold when you see the dollar rising. So we had to kind of step back a little bit here and think about, okay, what's going on, right? Understanding what's happening. And then the most important thing was tape reading. Tape reading was one of the most important things today because it showed us that we did have support on gold, right? We did have resistance on the euro. Okay, if you're reading tape today, you could navigate through that mess by simply watching your tape and understanding whatever happens is the truth on the tape. Okay, we really, as day traders, guys, remember guys, as day traders, we oftentimes don't know what the actual cause is for these moves out there.